Good morning, everyone. Welcome to the May 12th Tuesday edition of Market Opening Bell, your 10-minute guide to the stock market. The Iran situation has not eased and the market is also watching the upcoming China-US leaders summit this week. The Hang Seng Index opened 82 points lower, but reversed gains in the afternoon before closing with bulls and bears locked in a tug of war. The Hang Seng Index finished at 26,406 points, up 13 points or 0.05%. Total market turnover was $288.4 billion. The X-share index closed at 8,884 points, down 4 points or 0.05%. The Hang Seng Tech Index closed at 5,106 points, up 3 points or 0.07%. Southbound Stock Connect recorded a net inflow of 70.99 million Hong Kong dollars into Hong Kong stocks. Among them, net buying included Alibaba $1.074 billion, Kuaishou $988 million, SMIC $782 million, PopMart $173 million, and Cambridge Technology $123 million. Net selling included Tencent $892 million, Tracker Fund $648 million, Xiaomi $171 million, Hua Hong Semiconductor $161 million, and Yangtze Optical Fiber and Cable $156 million. According to statistics, southbound funds have net bought SMIC for 5 consecutive days, totaling $3.429 billion. Net sold Hua Hong Semiconductor for 4 consecutive days, totaling $893 million, and net sold Xiaomi for 4 consecutive days, totaling $1.878 billion. Technically, the Hang Seng Index hit the low of 26,219 points yesterday, falling just 6 points short of fully filling the upward gap created last Thursday. It eventually closed up 13 points, forming a small bullish hammer candlestick. This suggests that the short-term consolidation has likely been completed, with the index poised to challenge the 26,700 level again. The Shanghai Composite Index opened 21 points higher at 4,201 points, hitting a new high since July 2nd, 2015. It continued climbing throughout the day and closed at 4,225 points, up 45 points or 1.1%. The Shenzhen Component Index rose 335 points or 2.2% to close at 15,899 points. The Chinese index surged 132 points or 3.5% to close at 3,928 points, marking a new high since mid-June 2015. In addition, the Star 50 index rose 4.7% to a new high, closing at 1,716 points. Total turnover in Shanghai and Shenzhen reached 3.53 trillion yuan. The RMB central parity rate against the US dollar was set at 6.8467, the strongest level since March 24, 2023, up 35 pips from the previous day. The onshore RMB traded at 6.7968 per US dollar, reaching its highest level in more than 3 years. Several investment banks have released reports stating that the renminbi exchange rate remains significantly below the level justified by China's export strength and external surplus. They estimate the renminbi is undervalued by more than 20% against the US dollar. They have raised their renminbi forecast, expecting the rate to reach 6.8 in 3 months, 6.7 in 6 months, and 6.5 in 1 year. Hong Kong-listed mainland property stocks rose collectively on the news fronts following the sell-out in a day phenomenon in Shenzhen during the May Day holiday. Guangzhou also saw multiple projects sell out on the first day of launch this year. On May 10th, Poly Haiyuan's new project in Haizhu District, Guangzhou, launched for the first time, offering over 390 units across buildings 6, 9, and 10. According to buyers, online selection started at 11:30 a.m. and all units were sold out in just 2.5 minutes. In addition, with the continued implementation of Shanghai's 7 measures, the city's property market successfully concluded a strong Golden March and Silver April. Data from the Shanghai Real Estate Trading Center showed that in April, the city recorded 28,742 second-hand property transactions, up 22.3% year-on-year and surpassing the 27,080 units in April 2019, setting the highest April single-month volume in nearly a decade. Meanwhile, new home sales slowed slightly, but high-end properties continue to show strong value, with a clear shift in market structure. It's also worth noting that as of April 30, 23 cities had introduced a total of 28 property easing measures. Many cities optimized provident fund policies, offered purchase subsidies, and supported trade-in housing programs. Industry insiders believe that in the short term, local governments will continue to focus on these directions, refining policy types and target groups to make the measures more precise and effective. South Korea's Kospi index hit another record high on Monday, breaking through 7,800 points. SK Hynix surged more than 15% intraday to 1.949 million Korean won, pushing its market cap close to 1,400 trillion Korean won, with a year-to-date gain exceeding 190%. The core driver behind the stock's strength is the epic rise in memory chip prices and the continued widening of supply-demand gaps. The Hong Kong-listed CSOP 2 times leverage SK Hynix ETF 7709 closed at $103.7, soaring over 32% and hitting a new high with a year-to-date gain of more than 540%. Reports indicate that SK Hynix has received investment proposals from major global technology companies for its new production lines, including funding for expensive manufacturing equipment to secure memory chip supply. The clients have reportedly offered various packages, including investing in dedicated memory production lines, an unprecedented move in the global memory chip industry. Other proposals involve providing funds for the purchase of ASML extreme ultraviolet lithography machines. There are also suggestions regarding SK Hynix's large-scale manufacturing plant under construction in Yongjin, South Korea, which will focus on DRAM production. However, SK Hynix is taking a cautious stance toward these financial commitments, as accepting them could tie the company to specific buyers and force it to supply chips at lower prices. JD.com will release its first quarter 2026 results today, expected to show slight revenue growth but profit pressure. Total revenue is projected to be between 309.5 billion and 315.1 billion yuan, representing year-on-year growth of approximately 2.8% to 4.7%. JD Retail revenue is expected to grow about 1.3% year-on-year, while service revenue is expected to rise around 17.3%. Adjusted profit is estimated at 5.1 billion to 6.1 billion yuan, a significant year-on-year decline of about 52% to 60%. The market is paying close attention to the outlook for the delivery business. New business losses, including delivery, are still expected to exceed 10 billion yuan, though the loss is likely to narrow quarter-on-quarter. Investors will look for management's latest views on consumption recovery, especially the impact of the trade-in policy, JD Retail's profit margin stability, progress in narrowing new business losses, and updates on dividend payouts and share buybacks. Fit Hon Teng announced its first quarter 2026 results for the period ended March 31st. The overall performance showed steady revenue growth and a sharp jump in net profit. Total comprehensive income attributable to owners of the company reached $12.104 million, up 60.43% year-on-year. Net profit from continuing operations was $10.446 million, up 67.32% year-on-year. Revenue and other operating income amounted to $1.198 billion. an increase of 8.61% year-on-year, benefiting from strong demand for AI server interconnection solutions such as backplanes, copper cables, and liquid cooling connectors. This segment has become the company's main growth engine. The company continues its transformation from traditional consumer electronics assembly to a high-margin connector and core components manufacturer. 2026 is regarded as a key year for its high-margin businesses to enter a volume ramp-up phase. High-voltage connectors and in-vehicle electronics related to electric vehicles maintain steady growth, further enhancing overall profitability. US President Trump rejected Iran's response to the US peace proposal, raising concerns that the closure of the Strait of Hormuz may be prolonged. This pushed oil prices higher. However, the S&P 500 and Nasdaq still hit new record highs on Monday. The fear gauge VIX index rose 1.19 points or 6.9% to 18.38. The S&P 500 gained 0.2% to 7,412 points. The Nasdaq rose 0.1% to 26,274 points, and the Dow Jones Industrial Average advanced 0.2% to 49,704 points. The Nasdaq China Golden Dragon Index, which tracks Chinese stocks, climbed 72 points or 1% to close at 7,067 points. Of the 11 sectors, 6 closed higher, led by energy, while communication services recorded the largest decline. Intel rose 3.6% according to people familiar with the matter. Apple has reached a preliminary agreement with Intel under which Intel will manufacture chips for some Apple devices. The sources said the two companies have held intensive negotiations for over a year and finalized a formal agreement in recent months. It's still unclear which Apple products Intel will produce chips for. Apple ships over 200 million iPhones annually, along with millions of iPads and Mac computers. Nvidia rose 2%, making it one of the best performing stocks in the Dow. Reports indicate that the IPO of Nvidia rival and AI chip maker Cerebras Systems has received strong demand. The company plans to raise the IPO price range from $115 to $125 per share to $150 to $160 and increase the offering size from 28 million shares to 30 million shares. At the upper end of $160 per share, Cerebras is expected to raise approximately $4.8 billion, higher than the original target of $3.5 billion. The IPO has reportedly received 20 times oversubscription. Qualcomm surged 8.4%, making it one of the top performers in the S&P 500. Micron Technology rose 6.5%. So far, approximately 89% of S&P 500 companies have reported quarterly results, with revenue up 10% year-over-year and earnings rising about 25%, beating the expected 12.6% growth. Constellation Energy was among the first to report this week, posting increases in both adjusted earnings and revenue for the first quarter. Companies scheduled to report earnings this week include Petrobras, Cisco Systems, and Applied Materials. On economic data, the National Association of Realtors reported that U.S. existing home sales in April rose 0.2% month-over-month to a seasonally adjusted annual rate of 4.02 million units, slightly above March's 4.01 million, but below expectations of 4.05 million. Sales were flat year-over-year. Today, the U.S. April Consumer Price Index will be released. It is expected to rise 0.6% month-over-month, following a 0.9% increase in March, driven by energy. On a year-over-year basis, the CPI is forecast to accelerate from 3.3% to 3.7%. Our stock pick today is Techtronic Industries, stock code 669. For Techtronic Industries, the explosive growth of AI data centers does not primarily present opportunities through direct participation in computing power infrastructure construction. Instead, the main opportunities stem from the industrial-grade tool demand and energy management technology migration generated during the construction and operation and maintenance of data centers. The construction of AI data centers is massive in scale with extremely precise internal cabling and equipment installation. This will directly benefit Techtronic's flagship professional brand, Milwaukee. Data center projects involve extensive server rack assembly, precision cabling, and cooling system installation. Milwaukee's high-end cordless electric screwdrivers, cable cutters, and professional hand tools enjoy very high market share in this field. In addition, data centers are often constructed in enclosed or low-light environments. Techtronic's MX Field high-power cordless equipment can provide a zero-emission, low-noise construction environment which meets the ESG requirements of data center projects. On the other hand, AI data centers have far higher requirements for cooling system compared to traditional data centers. Milwaukee offers a complete toolkit tailored for HVAC professionals, including thermal imagers, pipe inspection tools, and leak detectors. Demand for these high-margin, professional-grade tools is expected to surge with the expansion of data centers. Given the tight project schedules and high value of tools in data centers, Techtronic's one-key cloud-based tool tracking system helps contractors efficiently manage tool assets on large-scale construction sites. Meanwhile, Techtronic's core competitiveness in the cordless tool sector lies in its lithium battery management system, BMS. As AIDC increases demand for distributed energy storage and backup power, the company's years of accumulated high discharge rate and thermal management technologies may be converted into edge solutions for data centers or small-scale energy storage facilities. Data center contractors are increasingly inclined to use cordless tools to reduce on-site cabling and lower carbon emissions. Techtronic's pure cordless ecosystem is well positioned to align with this green building trend. Recommendation: buying price $119, target price $129, stop loss $113. I do not hold the above stock.